Trump's return to the political spotlight has immediately sent shockwaves through global financial markets, with the US dollar becoming the focal point of renewed uncertainty and intense debate among investors worldwide. Currency traders reacted swiftly as headlines about Trump's comeback triggered sharp intraday swings, highlighting how deeply political narratives can influence confidence in the dollar's future stability. The dollar's sudden volatility reflects fears that a revived Trump agenda could reintroduce aggressive trade policies, tariffs, and diplomatic tensions that once disrupted global commerce flows. Investors remember how previous Trump-era decisions reshaped currency markets, and that memory alone has been enough to ignite speculative trading and rapid repositioning across forex desks. As markets digested the news, safe haven demand briefly lifted the dollar, but optimism faded quickly as concerns over long-term policy unpredictability took center stage. Analysts note that uncertainty, rather than any specific policy announcement, is driving the current turbulence, underscoring how perception can be as powerful as action in financial markets. The prospect of renewed trade wars has weighed heavily on sentiment, especially among emerging markets that rely on stable dollar liquidity and predictable U.S. economic leadership. Wall Street banks have issued cautious notes warning clients that Trump's return could mean a bumpy road ahead for currencies tied closely to global trade dynamics. Bond yields reacted alongside the dollar, as investors reassessed inflation risks that could emerge from potential tariff-driven price pressures under a new Trump administration. The Federal Reserve now finds itself in a delicate position, as political uncertainty complicates its messaging around interest rates and long-term monetary policy goals. Some traders argue that Trump's pro-growth rhetoric could ultimately support the dollar if it leads to stronger U.S. economic performance and capital inflows. Others counter that fiscal expansion combined with protectionism may widen deficits, eroding confidence in the dollar's role as the world's reserve currency. Global central banks are watching closely, aware that sharp dollar swings can ripple through their own economies via import costs and debt servicing pressures. In Asia, currency markets reacted nervously, with several regional currencies weakening as investors sought clarity on how U.S. policy might shift under Trump's influence. European markets echoed similar concerns, particularly regarding potential trade disputes that could strain already fragile economic recoveries across the continent. Volatility indexes linked to currency markets spiked, signaling heightened demand for hedging as traders brace for more abrupt moves ahead. Hedge funds have reportedly increased short-term bets on dollar volatility, seeing political headlines as catalysts for rapid price action rather than long-term trends. Corporate treasurers are also reassessing risk management strategies, knowing that sudden dollar swings can significantly impact earnings in cross-border transactions. The energy market has not been immune, as a volatile dollar directly affects oil pricing, adding another layer of complexity to global inflation expectations. Gold prices saw renewed interest as investors searched for protection against political and currency uncertainty tied to Trump's dramatic reemergence. Market historians point out that political comebacks often create exaggerated reactions, which can later stabilize once concrete policies replace speculation. Nevertheless, the initial shock has revealed how sensitive the dollar remains to leadership narratives, even years after Trump first reshaped political discourse. Social media amplified the market reaction, with viral commentary accelerating sentiment shifts and fueling short-term trading momentum. Retail investors joined the fray, drawn by dramatic headlines and rapid price movements that made currency markets unusually active. Economists emphasize that structural factors like debt levels and productivity matter more long-term, but short-term volatility often ignores such fundamentals. The dollar index's erratic movement reflects this tug-of-war between emotional trading and rational economic assessment in times of political transition. Emerging market policymakers are particularly concerned, as a stronger or unstable dollar can tighten financial conditions and slow domestic growth. Trade-dependent industries have begun lobbying for clarity, fearing that renewed policy unpredictability could disrupt supply chains rebuilt after years of turmoil. Financial media coverage has intensified, framing the dollar's movement as a referendum on Trump's potential impact rather than pure economic data. Currency strategists warn that repeated political shocks can reduce market efficiency, increasing costs for businesses and governments alike. The U.S. dollar's global dominance means that even domestic political developments can have far-reaching international consequences. Some investors see opportunity in the chaos, arguing that volatility creates attractive entry points for disciplined, long-term positions. Others remain defensive, preferring cash and short-duration assets until the political outlook becomes more defined. The dollar's role as a safe haven is being tested, balancing fear-driven demand against worries about future policy direction. Market confidence may hinge on whether Trump's rhetoric evolves into concrete proposals that markets can realistically price in. Until then, uncertainty itself remains the dominant force shaping currency movements and investor psychology. Political analysts suggest that election dynamics will increasingly intersect with market behavior as headlines continue to emerge. The dollar's fluctuations have already begun influencing global trade negotiations, as partners reassess risks linked to U.S. leadership changes. Financial institutions are updating stress scenarios to account for sharper currency swings tied to political developments. Volatility has also spilled into cryptocurrency markets, as some investors explore alternatives to traditional fiat currencies. Despite the turbulence, the U.S. economy's underlying resilience still provides a foundation of support for the dollar. However, confidence is fragile, and repeated shocks could slowly undermine trust if uncertainty persists. The coming months are expected to bring more headline-driven moves, keeping traders on edge and strategies flexible. Market veterans advise caution, reminding investors that political noise often exaggerates risks that later normalize. Still, Trump's return has undeniably reawakened memories of a uniquely volatile era for global markets. Each new statement or rally appearance now carries the potential to move currencies within minutes. The dollar's journey ahead will likely reflect a complex mix of politics, policy expectations, and economic data. As markets adapt, one thing is clear: Trump's comeback has reintroduced uncertainty as a defining feature of the dollar's narrative. For investors worldwide, navigating this environment will require vigilance, discipline, and a deep understanding of how politics and markets collide. The explosive reaction serves as a reminder that in global finance, leadership changes can resonate far beyond borders and ballots. Ultimately, the dollar's fate will depend on whether uncertainty gives way to clarity or continues to dominate market psychology.